Hey guys, Mike here. So today we get to go over all your questions and comments, and you had some really good ones about the big popular stuff is the Fed, rate cuts, TLT, TMF, snow, about dollar cost averaging more into the SPY and QQ ETFs versus like individual stocks, things like that, the pros and cons, why you would do it, why you would not do it. And so really good. So feel free to participate in the comments on this or ask more questions if I don't answer them, or you just happen to have others as we go along, okay? So as usual, let's get right into it. And the first one comes from Pablo, and he says, those Fed speakers are correct. Why would they cut? Makes no sense. He's referring to the Fed speakers this week about saying, we still have this fight for inflation. Inflation is not really going down right now. It's stalled and all this good stuff. And I will say this right here. I actually did this video a few months back for members, right? About saying the Fed has never, ever cut rates when this is going up. I understand it is a year of first, or the last 4 years, each year has been a year of first. We have seen things we've never seen in the market before, believe it or not. All right. And I think you know what I'm talking about. Many things. I always say I need to get a t-shirt printed for that, right? But understand this is what I'm talking about. The Fed has never, ever cut rates. So this might be the first time they ever do it when the ISM manufactured new orders is actually going up. When the cycle is supposed to be turning up, coming out of contraction, they've never done it. You can look on this chart, you can see in 2019, everybody thought the economy was great and we were roaring. That's actually not true. This was rolling over, and that's why they cut rates in July of 2019, not in 2020. They were already cutting, by the way. They had paused before that, and then they started cutting, okay? And this is why Trump was railing on him to stop raising rates, because his economists were telling him, dude, you're slowing the economy down. You're going to drive us into a recession, right? And so you can see it's going down. That's when they start to pause and when they cut. Right? That's the way it works. And obviously we shut down the world here, so that didn't really matter, right? And so when you look, we're actually coming up, supposedly out of contraction, really just kind of, we don't know yet, but we're paused. They haven't cut. But when you look anytime, any rate hiking cycle, anytime this is going up, you do not see them cutting rates. It's when it's coming down, especially into contraction, which is normally why we go into recession, because they end up waiting too late because their data is old and everything, and then it's too late, and then bam, here comes a recession. So they just cut too late. But you look at any cycle. So when this is going up, they do not cut. When it's coming down, especially going into contraction, that's when they cut. Usually when it starts to roll down, they're still raising rates, right? Because it's slowing the economy down. And then they start to pause and they see, oh boy, this is really rolling over. And then it goes into contraction. By then, a lot of times it's too late to turn it back up. But that's the cycle, okay? And so you look in this chart, feel free to pull it up. All you gotta do is pull this up in TradingView if you need an account. Feel free to hit the link down the bottom. You can do this on any of them, okay? And that's why you're also seeing what? These debate. Oh, wow. Now all of a sudden June is like almost 50-50. And we pull it down even closer. I mean, look at the change in this, right? We've gone through this multiple times, this song and dance since going back to last November. They're going to cut in December. They're going to cut in March. They're going to cut in June. Now, oh, wait a minute. Gone from 59 a month ago to 50-50 now, right? And so that's what this is repricing the market, trying to figure things out, because it's like a child. If a child has a lollipop in their mouth and you take it out, what do they normally do? They start crying, right? That is liquidity to the market. Those rate cuts are liquidity and more easing to the market. That's the lollipop in the mouth. Right now, it just keeps getting yanked out and they go, wah! Right? Which means the market's coming back down and we're repricing. And then all of a sudden, they're going to cut in July now. Beep. Oh, I'm so happy I have a sucker. That's the simple way to put it. All right, so hopefully that helps. And before we continue, guys, please hit that thumbs up down there. It helps people find the video. I really appreciate that. And think about subscribing if you like these kind of videos. Now, next one here says, hey, Mike, do you think TMF will continue to come down unless or no rate cuts is making me really nervous for my position in the stock? Big loss already. Remember, it's not a loss unless you sell. But yes, TMF, for those who know, is a triple leverage ETF. And oh, yes, I told you about these. If you're in these and when they go down, whoo, boy, they go down. Okay, and they go down fast. So you got to understand that you don't want to be sitting in them when things are either going down or sideways. It doesn't do you any good. And so again, this one follows what? TLT. All right, and this was a big one back in November, whatever, that time when it popped. And it's, oh, getting rate cuts, here we go, and it roared, and everybody was rolling into TLT and stuff. And that's just the way it is. And when you see here, it's an inverse relationship. Okay. When you see, I'll take you through the last two rate hiking cycles. When they're raising, TLT is either basically sideways or down. All right. When they pause, you get the pause rally. There are three phases here, as I told members in the video probably a month ago. There's your first move up, then they cut it, goes up more, it's a stair step, and then the recession. Bam, that's when you get your biggest pop. And you don't get rich on TLT unless you own a whole lot of options, whatever it is, but not TLT itself. It doesn't move that fast. It's a bond ETF, right? This was '08, same thing. They're raising. It's either basically flat pretty much. They pause, it goes up. They cut, it goes up more, and then here's the recession. Bam. And that's when it has this biggest spike because everybody goes to safety. And then you look now, you can see obviously everybody's going to stocks right here, so that didn't even matter. Plus, you're not getting any yield. And then of course they start raising rates, and boy, this thing starts going down real hard. You can see lost a lot of value. All of a sudden, ooh, they pause and they're going to start cutting. It's going to happen here really soon, and boom. Big move up. Now it's just started selling back down because now there's all this. Oh, are we going to do it? I don't know if we're going to do it. Let's see what happens. Man, inflation not really coming down anymore. Well, the job market's still hot. Wow, why would they cut, right? But also remember, it's not just about the cut. It's going to be the anticipation of the cut, okay? So hopefully that answers your question. Now, next one here comes from Dr. Marcus. Always good for a couple questions. This is based on a debate with a friend of mine. Can you give me a good reason as to why it's better to choose individual stocks yourself over investing in SPY over 20 to 30 years? Studies consistently show that hedge fund individuals cannot beat the SPY returns long term. Companies in the SPY are always changing manipulation, and corruption will always be a factor when it comes to individual stocks as well. What would be the argument for choosing individual stocks over the SPY again? And there's actually a great saying by John Bogle. It says, don't look for the needle in the haystack, just buy the haystack. That would be your ETF, right? And he wrote this book, Little Book of Common Sense Investing, the only way to guarantee your fair share of stock market returns. And, when you look on here, one big reason is individual stocks over ETFs is the cost of owning the ETF, such as annual operating fees, expenses, and to what extent those fees have historically affected and may affect the ETF's performance. And the other one is, if you're trying to make that case by owning individual stocks over ETFs, and I say own them both, to be honest with you. That's what I like to do. Mix it up a little bit. And we pull up SPY and then some Vanguard ETFs, which is probably the most popular out there. VUG is all about tech. VOO and VTI are two very popular ones as well. And when you look on here, you can see obviously big tech is always going to rule, but SPY's outdoing VOO and VTI. So, if you're breaking in, 80-some% over the last 5 years, that's really good, by the way. But if we just bring up the stocks that are in the SPY and the QQQ, for example, what's the top ones, the top weighted ones? And that's why it's not really a stock picker's market. It's really, you don't even have to do a lot of research. What are these ETFs investing in? Where's the heavily weights? Which stocks have the most weights? Because that's what's moving these, right? And why is that? Because they have a lot of cash, and some of them don't even have that much growth anymore, but they used to, right? So you just look at that and you go, well, heck, I don't have to be out there doing hour upon hours of research. You can just keep it easy and stay in the blue chips. Now, NVIDIA, of course, I'm not even going to talk about that because that was the AI pump, right? But if you go down and look at Microsoft's up the same time frame in 5 years, 253%. Apple's 244%. Meta's 199%. Google's 155%. And that's with all the crashes, right? There were two big crashes in that 5 years, and it's still there, right? Depending on when you bought in, of course. But, so a mix of both makes sense to me. I mean, I would never talk about the whole just all individual stocks. But again, it's up to you how you want to do it. And the good thing about holding the ETFs is on the drawdowns, unlike Meta going down 78% in the last crash, you probably went down 20 if you just owned the SPY or whatever. But again, long term, if you're able to ride those crashes, keep DCAing in, and they stay blue chip stocks, obviously you're going to make more money on the individual stocks. But it's good to have a mix to me. So let me know what you guys think about that. And the big thing to look at too, and understand when I say blue chip stocks and how important this is here is quarterly earnings, right? Look at quarter one. And look at what the Mag 7 accounted for. If it wasn't for the Mag 7, we would have been heavily negative on quarter one. The Mag 7 was up 37.2% when it comes to the earnings. And if you combine the other 493, it was negative, right? Now, this is going to change as time goes on. That's what the projections are. But that's just the way it is. That's how important these companies are and why you see big money going into them. So instead of trying to make it difficult and going out and trying to find a needle in a haystack, just look at what these large ETFs that are so successful are putting the money into, right? That's where big money's what drives up the stock, right? You got to buy them to have the prices go higher and stuff. These stocks most of them have dividends. They buy back a lot of stock, and Wall Street loves them. Okay, so hopefully that helps. Next one comes Dr. Morgan. He says, do you think these Fed speakers are given the okay or the script by Powell in order for them to either scare the market or create bullishness? I've always thought it was the case, but lately I've been thinking a lot of Fed speakers say different things, and I'm sure there's a competition amongst them with each one of them thinking they could do Powell's job better than him. Basically, when they say something different from Powell, it is insubordination or is it calculated? And the truth is, I'm not in the rooms, so I have no clue. I would assume they've kind of talked about this stuff, to be honest with you, but each one of them are individuals, right? I mean, you can see how they vote and everything else it could be different. Maybe they do want his job, that kind of stuff. But, you know, and then maybe they just have their own beliefs, right? One of them thinks they're smarter than the other. And so it wouldn't surprise me if there's a little coordination going on and then a little individuality going on. But remember, all the market is doing when listening to this, for example, if you saw it happen Friday, the Fed president said the same thing they said on Thursday. They were hawkish and all that good stuff. And the jobs data came out hot as can be, right? Same way it did on one of the other reports that supposedly drove down the market. And guess what the market did? It roared, right? Remember, they only use these news and these Fed speeches or whatever they're giving and stuff to move the market where they want to move it to grab liquidity. That's all this is. Just grabbing liquidity, moving, doing what they got to do. That's all it is, okay? And so just understand why they position and everything else. And so, yeah, are they doing it? Maybe. But I think it's a combination of both and stuff. But I don't think Jerome Powell says, here's what you're going to say. I don't see that happening. Most of these people strike me as very, I'm going to say arrogant, but, whatever word you want to sub in for them. I kind of feel like arrogance may be the right word. But no, I mean, that's, I'm pretty sure that know-it-all would probably be a better phrase, I would think, for most of these guys. But, yeah, that's kind of where I'm at on that. So let me know what you think. One of the last one here says, can you please look at Snow? Normally, I don't do individual stocks, but I actually will look at this one for you because I actually brought this to the members. And I looked at this one. You can see right here these three trend lines, right? And they basically represent three different times where you can see how the stock has come down. It's bounced off one of them at one time, right? But that bottom one is the end all, right? So, okay, we haven't been below this bottom one since June of 2022, I believe it is. And so, this right here, and you can see what happened. It popped, and he's, we're going to the moon. Now we're back at this bottom band, bouncing again as of Friday. And so we'll see if this starts to move up. It is in, a support area. And what I mean by it is if I pull up the VRVP, which is the volume profile on the weekly, you can see like this thing needs a bounce. This is where the majority of the volume is at. Because remember, the IPO price was way higher than this. Let me know if you're still in at the IPO price. And you go to the daily, you see the same thing. So if it can move up, you get to 170 right there before you hit resistance, goes up from there around 185. But you can see where the majority of volume is and why it does not need to fall below that last trend line right there, because that can be major trouble. All right, major trouble. Now, I did want to talk about some comments the other day when I said, about this rug I set my chair on and, happy wife, happy life. And some of you guys just tripped me out, man. So first one says, 2015, my unhappy wife cost me almost $1 million, one rental property and half my stocks, and a lifetime spousal report. Be smart, Mike. LOL. I love that one. Thanks for that comment. My dad told me the only 2 words I need to learn to have a good marriage is yes, dear. Yes, I have heard that one as well. Also, the happy wife equals happy life is a very bad saying, but it is still true. And then, of course, the next one says happy spouse, happy house. It's got to go both ways. I do agree with you on that for sure. And then no wife is a happier life. Okay, I got you on that. You want to be right or happy? I've heard that one. That is a big one. Do you want to be right or do you want to be happy? That can basically apply to so many different things in life, right? And then the last one, happy spouse, happy house. Yeah, I mean, I think it does have to go both ways. And so, yes, it does have to go both ways. So, yes, I may give in on the rugs, but my wife gives in on me too. So that's how it works. It's a give and take for those who aren't married. It's a give and take. If it's one way and the other way, you might as well go ahead and go get divorce attorneys now and be done with it. So that's ours. It's just going to be a miserable life if you want to hang in there and not do like the one guy and lose almost $1 million. So I'm sure we all know some couples where you're like, ooh, all right, I guess we know why they're staying married. But yeah, so anyway, I appreciate all those comments. If you got any more questions, please put them in the bottom and stuff. Hopefully, either I was able to answer them or somebody in the bottom in the comments is able to answer as well. So hope you guys have a good one, and I'll see you tomorrow to set up the week. All right, so have a good one, guys.